economic analysis. First, monetary policy. MPC of PNM used overnight policy rate OPR. On 3rd November 2020, MPC decided to maintain the OPR at 1.75%. Ongoing resurgence in COVID-19 cases has made some significant economies once again introduce control measures. Second, fiscal policy. Total expenditure of Malaysia for year 2020 was 314.7 billion as a drown out COVID-19 pandemic emergency required of government. COVID-19 pandemic has a major impact on fiscal policy, expenditure and revenue. Third, unemployment rate. The unemployment rate in Malaysia surged to 4.6% in September 2020 from 3.3%. In August 2020, the jobless rate was 4.7%. Unemployment rate in Malaysia for year 2020 exceed 4% due to the COVID-19 pandemic. Fourth, interest rate. Inflation rate start falling in February 2020 at 1.3%. Then the inflation rate constantly decreased after that. The drop in the inflation rate occurred as the supply of goods and services are higher than the demand from the consumer.
I will present about industry analysis. For the growth cycle of technology industry, they are clarified by rising profit, upcycle of the sector, and the rising domestic capital fund flows. For DG, they develop their network by latest technical advancement to facilitate dynamic spectrum sharing and cellular Internet of Things. For XOX, they allow e-wallet usage of WTSB microfinancing infrastructure, and its subsidiary, which is WTSB, provide 1 billion ringgit investment and loan algorithm. For TM, they achieve highest growth of 58%, and through its TM1, Cloud Alpha was expanded, and TM Wholesale signed a deal for border interaction with a local mobile player fiber optic. For competitive position of technology industry, first, the major issue of network growth and network optimization. Second, more political opportunities than industry or customer preference increase the regulatory engagement. Third, network capital expenditure have reduced. And lastly, DG and TM benefit in strong competition through large market shares and innovation competition.
So today I would like to present my part, which is for the fundamental analysis. So we choose 3 years, as we can see on the slide. The total asset, total liabilities, and the total equity of DG Telecommunication. So for the total asset, as you can see, it keep increasing from year to year, which is it shows a good performance for the company. Then the company own a good amount of asset. Besides, the company also have a low level amount of debt. It shows that the total equity of the company increased, but it collapsed in 2019. So for their liquidity ratio, as you can see, it is below 1, mean that the company does not have enough liquid asset to cover their short-term liabilities and debt. So for the profitability ratio, we calculate on the ROA, ROE, and also the net profit margin. As we can see, the ROE of the company is above 100%. It is because the company's shareholders' equity is small, and the income for the some period might exceed it, and the ROE would be over 100%. So for the intrinsic value, after we calculate for the average for the 3 years, we get negative 4.47%. So for the forecast part, the revenue of the company, as we can see on the slide, it shows a downward trend. So for the net profit margin, we calculate it by revenue times 3 years average net profit margin. So we get 23.23%. So it shows that the decreasing trend as well. The outstanding stock, as we can see on the slide, we get it from the investing.com. For the earning per share of the company, also shows a decreasing trend, as we can see on the slide. So for the PE ratio on the intrinsic value of stock, we get it from Bloomberg.com. As you can see, the price of the company also decreased. So next is for the Telecom Malaysia Berhad. The total revenue, gross profit, and the income, as we can see on the slide. As you can see that there is a slope down trend from 2017 until 2019. It is because there is an increasing in price, which is the demand is elastic. So the gross profit of the company rise from 2017 until 2018. But it collapsed in 2019. So it shows a fluctuation in the company net income. So for the liquidity ratio, as you can see, the ratio is above the industry average ratio. It shows that the company has a healthy current ratio and as well as their quick ratio. It might good for the company performance. Then for the profitability ratio, Also, we calculate for the ROA, ROE, and the net profit margin. So as we can see, it shows a negative trend among those ratio. It is because the company has a financial loss on that year. So for the intrinsic value, after we calculate, we get negative 5.43%. For the forecast, the revenue, as we can see on the slide, shows a decreasing trend from 2020 until 2022 for their future. So for the net profit, also we get it decreased. So the total outstanding stock, also we get it from the investor.com, as we can see on the slide. For their earning per share, as we can see, the price is decreased. For their PE ratio, on the intrinsic value of stock, we get 29.61% from the Bloomberg. As we can see, the price of the company, for the future price of the company is decreased. Next is for the XOX Berhad. As we can see on the slide, their total asset, total liabilities, and the total equity of the company. It shows an increasing trend in their total asset. So the total asset rise from year to year, which is it indicate there is an increasing trend as well as on the company liability and equity on that year. Then the company has a low amount of total liability, which can benefit favorable interest rate on any new debt it undertakes from lenders. So their liquidity ratio, as you can see, it is a high amount, it is high from the industry average, as well as higher than its peers group that we analyze. For their profitability ratio, as you can see, the ratio was not good, as their ratio keep decreasing and shows a negative amount. The causes of this problem is because the company has faces a loss in their net income for the year 2018 and also in 2019. So the company need to improve their performance as well to compete with its peers. So for the interest value, after we calculate, we get 83.08%. For the forecast, the revenue is increasing, as we can see on the slide. For their future revenue, it is increasing. For the net profit, as we can see, it is negative amount for the company, because after we calculate the revenue time their average net profit margin, we get negative 4%. So it indicates the negative amount in their future net profit. So the total outstanding stock, we get it from investor.com. Their earning per share are also negative. As you can see, it is downward trend. So for their intrinsic value of stock, as you can see, their future price is increasing. So, but the PE ratio of the company, we get it negative 8.27. Maybe the negative PE ratio is because of the company has negative earning.
Now, I would like to present the technical analysis in these three companies. Based on the MACD graph, investors are encouraged to buy DG stock on the 5th November because the MACD line, which is blue line, start to move upward and cross over the signal line, which is red line. On 27 November, suggest investors sell the stock. Then come to the Telecom Malaysia company. Investors are encouraged to buy the Telecom Malaysia stock on 9 November and sell it on 11 December. And the MACD graph of XOX Berhad, investors are encouraged to buy on 14 October. And once the stock is bought, investor must hold the stock until the MACD line which intercept on 23rd November and sell it on the day after to gain profit. Next, RXI indicate the stock market condition based on the index value. The RSI graph of DG show that there are no overbought and oversold condition. For Telecom Malaysia stock, investors should buy on 10 August and 17 August, where the index value is less than 30. Moreover, investors should sell the stock from 25th November to 8th December, where the index value is more than 70x. For the RSI graph in SOS, the investors should sell the XOX stock from 15th July to 12th August. On the day of 30 September to 8 October, investor can decide to buy the stock.
Generally, we consider the stock is in an uptrend if the price is above the moving average line. So if the price is below the moving average line, we consider it to be in downtrend. Traders take this as a signal to buy as the price crosses the moving average. If it crosses down the moving average, they take it as a selling point. For DG.com, we can see that the price crosses over the moving average line starting of 14th August. So it implies buy signal. The stock prices appear to move above the moving average line again from the 5th November and also contribute to strong buying pressure from the investors. Support is the level of stock tends to stable. The level from which a stock reaches and comes back is resistance. When a stock price falls back to previous lows, the investors might be more interested in buying. Likewise, when a stock price approaches previous high, investors might be interested in selling. For the DG.com, the support line is forming in the midst of October as the price of stocks drops. Meanwhile, the resistance zone occurs in the midst of December. Investors might be interested in selling this zone. In telecom chart, the price appears to pass over the moving average line on 24th August and thus means a buying signal. There is a strong buying pressure from the investors in December leading to continuous uptrend. In the diagram, we can easily see that the resistance line is developing from early July to mid-July. Also, we can see the support zone is forming in the midst of August. In XOX chart, the stock prices seem to be above the moving average line till 12th August. In early of September, the stock prices started to show up below the moving average line till the first month of year 2021. In December, there is no strong buying pressure from the buyers. Thus, our group will not take the chance of a downtrend to buy or sell. The resistance line is forming from 28 July till 12th August. Also, we can see the support zone is forming in the midst of August, which is on 18th August. It is the perfect time for an investor to buy the stock.